What's up? What's up? What's up?
Yo, yo, yo.
What's up, you guys? What's up? Come on in the room. I am excited. How y'all doing today? Come on in the room.
What happened to
Let's go. We're gonna do it. We're gonna do it. I wanted to first greet and get everybody in the room first, and then we'll do it. What's up, you guys? How's it going today?
As you coming in, let us know who tapping in. Let us know. Drop your name. Did you?
I am going to send. I'm gonna post it real quick. Antonio was just about to ask me, did I have the link so that you guys can approve for your post when it comes to StreamYard? So if you do this one time, then you shouldn't have to do it again.
What are they doing?
So you are basically just approving. It's not even gonna let me send it to you guys. You're basically just approving. I'll send it to you online for StreamYard to allow your name to show up whenever we have a live. That's all it is. So I am gonna paste it real quick in the chat. What's up, Marcus? What's up, Adrian?
Especially my ex-Simple family, man. Make sure y'all hit that link so we can know who y'all are. Like, y'all get special attention. So we can't give you special attention if you say Facebook user.
Absolutely.
So make sure you are hitting that link so we can see your names inside.
Absolutely. What's up, Cameron? Marcus, I haven't talked to you in a minute. What's going on? Good to see you. Good to see you.
That's Bradley.
Yes, yes. What's up, Cliff? What's up, you guys?
Cliff in the building.
What's up, Kelvin? Hey, Kelvin.
Cliff, man, that was a great idea with that car wash, with that building you got to do a car wash or something like that. I want to talk to you about maybe putting a big sign up that said we buy houses or something like that.
Yeah.
Or you could do that too. But that's just something I was thinking about. If you want to make some money off of, let me know.
Absolutely. What's up, T? What's up, Adrian? What's up, you guys?
Let's go.
All right. Well, you guys get ready to buckle your seats. Get ready to ask some questions. Get ready to learn. And don't hold it in. Like, really shoot us your questions. All right. You ready?
Let's go.
Let's do it. All right. I see T said she got her notebook ready. You ready?
Ready. All right.
Welcome, you guys. My name is Ashley Denmark.
And I am Antonio Denmark.
We are your funding coaches. We are here for you to help you get to the next level. What's up, Tanya?
What's up? We got to work on your intro.
What is yours?
Yo, yo, yo.
What's up, Tina? What's up, Tina? So, you guys, for those of you who are in REI Decoded, there is a link that I pinned to the top. Make sure that you click on that link and approve for StreamYard to see your name so that we can see your post without having to without having to try to figure out who it is. So it doesn't show up and look something like this. Let's go. What's up, Danielle Mike? Danielle Mike Barker.
Miss Mike in the building.
Absolutely.
Look, Cliff say he got a poster up and his message has been jumping every day. I'm telling you, Cliff, when I seen the post, that's the first thing I thought about is, man, I'll buy me a big sign to put out there.
Absolutely.
We're going to talk about that.
Absolutely.
And even if I just put a investing in real estate sign, I ain't got to put no we buy houses sign. I got different signs. We're going to talk. We're going to talk.
Nobody knows what you're talking about.
We talked about it earlier. No. Earlier before you went on break, I said great idea with the building.
Okay. That's it.
You weren't even listening.
I did. That was all you said, though.
No, making it a car wash or doing something creative with it.
Okay.
By putting a sign up. I said it earlier. That's why she said, I got me one there.
Okay.
Come on, man. Tighten up. Y'all tell them, catch up. I'm ready. Let's go.
You go ahead. I'm ready.
You gotta hit the button, though.
Welcome, you guys. Today's training is gonna be about getting business funding and being able to do it with no business, in total transparency and no business. Somebody said, he said that I'm not paying attention. He didn't say that. He didn't say that. Adrian taking up for you. Adrian taking up for you. Oh my goodness. All right. So let's get into it. Let's jump into it. All right. So how many of you thought that it was like crazy when you heard like getting business funding without having a business? Y'all drop it in the chat. Drop crazy if you thought that was crazy. Type it in the chat.
I said it, so I hope they didn't think I was crazy.
Well, let's find out. If you thought that this was absurd, this was absolutely crazy, type crazy in the chat. All right, we got one crazy.
Yeah, put crazy. Bro, you gonna break bread with a drink?
I'm not.
Bro, you gotta shut, bro.
I am not.
Bro, you gotta shut his drink, man.
You guys, okay, we got one crazy. Anybody else thought it was crazy? Like, we can't do that. That's absolutely crazy.
Can I get some of this drink though?
They're not here for us to talk like this, but you guys, this drink was a part of my lunch. Antonio has one. It's on this table. It's empty. Should I share with him? Should he drink all of my drink if I took my time on my drink?
Nah, don't get dry and I stop talking. And she gonna get feel some type of way. Why you tell me you needed something to drink?
They say share with that man. Yes, yeah. Wait, let me get another sip first then.
Let's go, man. Let's go.
Sip. Right. Just a little. Just a swig.
Just a swig. Well, you gotta be over 50 cents. You gotta be over 50 cents just a swig.
Can't have him with the cotton mouth. All right, let's jump into it. When you first hear it, it is a little crazy. It does sound a little crazy. It seems far-fetched most of the time, and it seems like it's something that can't happen. So that's why we're going to walk you through it. That's why it's important that we talk about it so you guys know exactly. If you don't have a business today and you're looking to start investing in real estate, you're looking to take your business to the next height, these are literally the steps that you need to take so that you can get funding for your business. All right. So first thing we're going to do, Sonia, is we're going to talk about data points. So before we go into the actual data points,
okay,
let's talk about real quick exactly what are data points when it comes to getting funding. Like, what are data points? What does that mean when we say data points?
Data points are a collection of different things based on your personal credit. All right. So when we say data points, we are talking about how many inquiries you have. Now, we got a whole slide about this. Why am I doing this now?
Well, just say that part before we get into it. Just break it down, surface, and then we're going to break into the different data points.
I want to talk about that.
All right. So data points are.
So what? Let me say what I want to say first.
Okay.
Because I feel like we got a whole slide about data points. That's how we created like
Tony,
data points.
Stick to
slide.
Stick to it. Don't. You're going way left. Stick to it. Thank you.
Okay. All right. So understand that there are two ways to get business funding. There is, I call it the slow lane way, where you have to create your LLC. You have to build your trade line, your tiers up. So you got tier 1, tier 2, tier 3 type of accounts, and that takes time. You go get your Granger accounts, you get your net 30s account, your net 10 account, and that is a way to build up your business credit. So one thing I want you to understand is when people say they want to build it that way, they are saying they're trying to build their business credit to not PG the business credit, meaning PG stands for personal guarantee. So when you build your business credit the slower way, there is a chance for you to not have to personal guarantee the funding once you have built it up. All right. That is absolutely not what we're talking about here. All right. What we're talking about is we are going to personal guarantee the funding, and it's going to be based off of your personal credit. All right. Ideally, you want a 700 or above, but if you 680 or above, you still in a good position. Right. And we're going to kind of go over what it looks like from a credit report standpoint, and also what it looks like from a business standpoint, and how you can put them two together to get business funding in 30 days without having a business. All right.
All right. So some of the things that we want to have together when we're talking about data points, we're talking about your number of accounts. How many accounts do you have? We're talking about how many inquiries do you have? We're talking about if there's any collections, any derogatories. We're talking about those things. Those make up your funding data points. And what that does is, depending on what they are, it makes you look attractive or less attractive when it comes to the bank, when it comes to the funder. So you want to structure your credit report so that you are the most attractive that you can be when you're going for funding.
And before, if you're watching this training, you're like, hey man, I don't got a 680 credit score, I don't got a 700 credit score, this can't help me. That's absolutely false. All right. There's two things I would tell you. If you don't have it, two things to do. One thing is build your credit up. There are ways that you can build your credit quickly that we're going to talk about a little later on in the training so that you can get to those data points. But also a shortcut, and I don't know if it's the right word, but a creative structure or creative financing way is go find you a partner that has these things. So when we first started this business funding world, we did not have these data points.
Right.
But we went and found people who did have the data points. And from there, we partnered with them and used their credit to get business funding. So the key to it is understanding business funding and what we are looking for when it comes to a credit profile, so that you understand if you partner with somebody, hey, you got a good credit score, you got a good credit profile, let's partner together. All right. So don't think real estate, don't think business funding only from what you have. Even if you ain't got a business, you can get a business, okay? Always be looking to grow, partner with people, or find a who, not necessarily a how. All right?
So you can get funding one or two ways when it comes to setting up your data points. You can get personal funding or you can get business funding. Personal funding, I'll go over personal funding first, and then we'll talk about business funding. When I'm saying personal funding, I'm saying if your credit report looks like this, then you can go for personal funding. All right. So if you have a 680 or plus credit score, that's good. You want to make sure you have zero collections, zero derogatories. You can have up to one late payment. You need to have 4 to 5 primary accounts. What are primary accounts? Primary accounts are accounts where you are the sole owner. You're not the authorized user. You are the sole owner.
You're not a co-signer.
You're not a co-signer. You need 4 to 5. It doesn't have to be 4 to 5 credit cards. It can be a mixture. It can be a credit card a car note. It can be a house,
A personal loan.
a personal loan. So it can be a mixture.
Student loans.
It can be a mixture of any of those things, but you want to make sure you have 4 to 5 primary accounts where you are the primary owner of that account. All right. Your credit age, your credit report should be between 1 to 2 years old, meaning your accounts on average from the date they started should average between 1 to 2 years old. It doesn't have to have that much length in age. Need to have less than 7 inquiries. Inquiries are per bureau. All right. So you want to make sure you have at least under 7 inquiries in total.
So anybody that's watching, tell us the 3 bureaus.
The 3 credit bureaus.
The 3 credit bureaus that most creditors pull from when you are looking for either funding or anything of that nature. What's the 3 main bureaus that people pull from? He's gonna ask.
Shauna Stewart said accounts you are actively paying. So yes, there need to be current accounts, not closed accounts. You want to make sure you have active 4 to 5 active primary accounts. Great job.
All right, somebody gave me the answer. I see it.
Yeah.
TransUnion, Equifax, and Experian.
Shout out to Ms. Gray for going and hitting the link so that we can actually see it.
Yes.
Shout out for Ms. Gray. Absolutely.
And when we say 7 inquiries, we're talking about per bureau. So don't just look at your credit report. A lot of times it just say you got 7 inquiries or you got 8 inquiries total. You want to look at it per bureau. How many do I have per bureau?
Right. And then you want to be under 30% utilization. All right. That utilization is credit card utilization. All right. You want to make sure you're under 30% in credit card utilization and that you have a minimum of 1 personal credit card with a limit of $5,000 or higher.
All right. So one thing I will say about personal funding is the only time we go personal funding is if you don't have what you need to go business funding. So sometimes you got to go personal funding first to get your accounts up, to get your mix of accounts up, to buff up your personal profile so that in 6 months to a year, you can go and get business funding. So I got one mom and daughter to where the daughter, she has a good credit score, but she doesn't have enough credit to go for business funding. So right now we're in the process of adding things to her profile that don't give her inquiry, but also add as accounts. So if you don't have the personal, that's when we go for personal funding. But the next step is business funding.
Absolutely. All right. So for business funding, you still want to have a 680 or higher credit score, 0 collection.
Before you go too far now. All right.
Okay.
I kind of want to talk about the benefits of business funding versus personal funding.
Right.
Right? So the benefits of business funding versus personal funding is business funding doesn't report to your personal profile if you're using the right banks. All right. That's the beauty of business funding. If you get $20,000 from an American Express business and you go use $20,000, that's not going to report to your personal credit. So therefore, you're going to always protect your personal credit and you are going to be using a business funding. Now, if you get that same $20,000 Amex card on the personal side and you max that out, it's going to destroy your credit more than likely. And not saying you can't recover it, but it's going to really hurt you. That's why business funding is so important, because it's not going to report to your personal credit. All right. Now, if you are making your payments, if you're doing negative, if you're not doing right by the business funding,
then it will.
Then it will report to your personal credit. Stay away from the Capital One cards.
The Spark.
Some of them report to personal credit.
Yeah.
So you want to make sure that you're getting the right business cards that don't report to your personal credit, because if you max it out, you don't want it to hurt your personal credit.
Out. Absolutely. On your credit.
Another thing I like about business funding is business funding a lot of times give you higher limits than what the personal side would give you. They start you off with higher limits. A lot of times business funding will start out at 10, 15, $25,000 cards or lines of credit compared to the personal side where you get $2, $3, $4,000 in lines of credit or credit cards on that side. So those are two of the main reasons that I like business funding versus personal funding.
Absolutely. All right. So for business funding, 680 credit score, just like with personal, zero collections and derogatories, just like personal. Absolutely no late payments. Okay. No late payments. And then instead of 4 to 5 primary accounts in business funding, well, to go for business funding, you need 10 or more primary accounts. All right. Your credit report needs to have a little age. But guess what? If you have quite a few primary accounts, you probably have some age with it too. So for age, you need 4 to 5, 4.5, 4.5 when it comes to years on your credit.
Tap in.
Do it.
And when we say age, we're not saying the oldest account on your report. What the banks do is, and the creditors, they do the average of all your accounts. So if you had one account for 5 years and you just got a new account for 1 month, they're going to average that out to 2.5 years. All right. So that's why sometimes when you get new accounts, your credit score
drops a little. And that's because of the age. It's not because of the inquiry. The age weighs more than your inquiry. So a lot of people think that, oh, this inquiry is going to drop my credit score. No, the inquiry is only worth 10% of your credit score, but the age is worth a lot more.
Yes.
So if it drops from 5 years to 2.5, that's what causes the initial ding in your credit report.
And then after you make that payment a few months, it goes back up. So just keep that in mind when we're talking about age. We're talking about your credit profile as a whole and the average of your credit, not just a recent one, not the oldest one you got. It's the average.
Absolutely. And then when it comes to inquiries, you want to have less than 4 inquiries per bureau. So less than 4 on TransUnion, Equifax, and Experian. If you have 4 and let's say you got 6 and you got 2 on each bureau, that's perfect. Like, don't even sweat it. But you want to make sure you have less than 4 per bureau.
And the reason that's important is because when you're applying for business funding, there are certain banks that you will get an automatic denial based on the amount of inquiries you have.
Yeah.
So if you have 6 inquiries and you go to certain banks, it don't even matter what your profile looks like. It's an automatic denial. So that's why inquiries are so important, because you don't want to look like you're going for funding to the banks.
Yes, and you surely don't want to hit them first. Because now you just all messed up. So yeah, the banks don't want to know that you're looking for money.
Yes.
They want to feel like they're giving it to you and it's like pro bono. They don't want to know
that pro bono is the right word.
You don't really need it. All right.
Yes.
It's just extra. They don't want to know that you really need it. So recent inquiries show, a lot of them, that this person is searching for money. So 9 times out of 10, if I give them funding, they're going to run up the line, and I don't want them to do that.
Yes. And sometimes one nugget I also give is, for my people who watch this, they say, hey, I don't need any funding right now. You know, I got some money in the bank. I've been saving for my business, or I've been saving to do what I'm going to do. I'm going to always tell you, the perfect time to go for funding is when you don't need it. Because when you need it, you're not going to be able to get it from a funding side. All right. So the perfect time to go for funding is when you don't need it. Because when you need it, it's going to be hard to get it.
Sometimes it's too late.
And it's too late at that time a lot of times.
Mm-hmm. Absolutely. All right. So we said less than 4 inquiries. You want to be under 20% utilization. So credit card utilization, say you have a credit card for $10,000.
$10,000.
You want to be under 20%. So you don't want to owe no more than $1,900 on that credit card. All right.
And that's across the board. Now, don't include your car payment. Don't include your house payment. Don't include your student loans. Those are called installment loans.
Right.
They don't count against your credit utilization. It's not like buying a house where it's counting your DTI.
Only your revolving loans is what you're counting.
And how we like to define revolving is anything that you can pay
and get back
and get access to that funding again.
Yes.
So if I got a $500 credit card and I pay $500, I can get access to that $500 again.
If I have an installment loan, let's just say a car. If I have a car for $20,000 and I pay off that $20,000, I'm not getting access to that $20,000 again.
You got to reapply for that.
Yeah.
All right. So that's kind of the biggest difference between installment and revolving.
All right. And then on credit cards, you want to make sure you have at least 2 personal credit cards with a minimum limit of $5,000 or higher. Minimum of $5,000. But you want to be in the higher you are, the more access to capital you get.
And the reason that's important is because no bank want to be the first one to give you high limit credit cards. What they want to see is your relationship that you've built with other banks and that you're managing the money good. Whether you got a $5,000 card or a $10,000 card. Nobody want to be the first one to give you a $20,000 card if you haven't showed you can manage $5,000.
Right.
All right. So the higher your credit limits on your personal side, the higher your business funding will be on your business side.
Yeah. Y'all drop some questions if you got any questions. Drop some questions in the chat. And if this is good information, I would say make sure you like it. Make sure you throw a thumbs up. And let us know if we need to go deeper or if this is really good. If this is good for you. All right. You ready?
All right. So this is the part that most of you probably didn't know.
Okay.
Would you say didn't know?
Yeah.
So when we say you can get business funding without having a business, what we're talking about is you can buy what's called a age corporation. All right. What is an age corporation, Ashley?
All right. So an age corporation is you're buying a business that's already intact. Basically, you're buying a business, I guess you could say, in a box. You're buying a business in a box and you're transferring ownership. So the old owner no longer exists. You become the new owner and you take on not just the business, but you take on the age, the history of that business. And it's important when you're buying an age corporation that you're buying one that has little to no history, and that is in good standings.
All right. And importance of that. Most businesses fail in the first year
or two.
Mm-hmm. So the banks have a approval system that they feel like if you've been in business for more than 2 years, you are a lower risk business to lend money to.
Versus someone who creates an LLC like yesterday and try to go for funding. All right. Can you do it? Absolutely. But you look better when you're seasoned.
Yes. So understand with the age corporation, if you buy age corporation, you want to make sure that there hasn't been any activity on it. Only thing they've done is filed the taxes and that it's in good standing. Mm-hmm. All right. That's important when you're buying an age corporation. Make sure that it's in good standing so that when it transfers to you, you can get the benefits of the age of the LLC. Now, there are some age corporations that you can buy 5, 10, 15 years old.
Yeah.
And you can do different things with them.
You go different types of funding with that. Absolutely.
Yeah. So step one, when you are trying to get $200,000 in business funding and you don't have a business period, is to buy an age corporation.
Yes. And let me say this. If you have a new business, you still need to buy an age corporation if you're trying to get up to $200,000 in funding.
Yes.
All right.
It is, I'm going to say, extremely hard, almost impossible to get $200,000 in business funding with a new LLC. All right. And I think we're going to talk about it. Most people, if you just start an LLC and go for funding, even with all our connections that we got, you might be looking at 35,
25 to 40,000
in funding. But if you have that age corporation with that same credit profile,
Yes.
nothing changes. But the fact that you have a age corporation and a good credit profile, now you're looking at 100,000 or better most of the time.
Yeah.
All right.
All right. So first thing we got to do is we got to buy an age corporation. Then we want to open up some bank accounts. All right. So when I say bank accounts, you're opening up business checking accounts from based off your age corporation, whatever that entity is. You're going to open up some bank accounts in that entity's name.
Importance. Banks like to do business with people they trust, they know, and they like. When you open up a bank account with them,
now you're dating them. Now you're saying like, hey, how you doing? I want to know more about you. They want to know more about you. And now it becomes a relationship where you're getting to know each other versus you just saying, hey, you just pulling up and say, hey, I just want $20,000. I just want $30,000. Who are you? Why are you asking me for money? It's different if you don't put a few dollars in the account, you're using the account, and now you're saying, you know what? I've shown that I can use this account. I've shown that I'm not going to overdraft this account. I've shown that I'm about to be a loyal customer and bring you multiple businesses on different lines and different products that you have. Now it looks different. Now we're talking a different language. We're not just, hey, how you doing? Now we're dating each other. We're trying to really get to know each other.
And not every bank requires that, but some of them do. If you want to get the max amount of funding you can get, having a bank account with them is a huge must.
Yes.
Now, if you want to go next level, set up some type of set up your what's the thing you get from work?
Your direct deposit.
Direct deposit. Mm-hmm. Set up a direct deposit to that bank. Oh, they're gonna really love you. They're gonna really be trying to get you to get their products. So a lot of times when you go into the bank, and this is just some sauce, when you go into the bank to open an account, they automatically do a soft pull on you. So when they're offering you products when you first walk in, they're not just offering because you walked in.
They're offering it because they saw your profile. They did a soft pull. You won't even get that alert that they did that soft pull. They made sure that prior to opening this account, that you were credit worthy to open up a business checking with them, and that you weren't on something that they call check systems. And that is to make sure you don't have delinquent checking accounts. So yeah, they did a whole full view of you in 30 seconds.
So understand, it's different between you going into regions and say, hey, I want to open a checking account. And when you open that checking account, she's not a salesperson. That private banker is saying, hey, have you thought about getting a line of credit with us? Have you thought about getting a personal credit card with us? And they offer you credit versus you saying, hey, can I get credit?
Yeah.
That changes the dynamics. Mm-hmm. Let them offer it to you. And then once they offer it to you, now you can accept. Yeah. Now they're more willing to give it to you. Or when you get those pre-approvals in the mail.
Those are from soft pull.
Those are from soft pull. They checked you out and they like what they see.
Yes. All right. And then you want to apply for a line of credit. All right. You're going to apply for a line of credit. You're going to apply for credit cards. And once you've met your number when it comes to however much you want. Some people stop at 100. Some people stop at 150. Some people stop at 180. Wherever you want to stop at. Once you do that, then you can start. You have the capital and you have the funds to start investing in your business.
Yes. So if you do not have a LLC and you want to get some funding, first thing you want to do, if you have the data points, is buy your age corporation, open you some bank account, apply for you some funding. All right. If you don't have the data points or you don't have the credit, you want to find you a partner. All right. Buy your age corporation, open bank accounts, apply for funding.
Yep.
All right. So understand that it can be done. Next slide.
All right. So how can it be done? So there's different age corporations you can get. you can get.
This is a new entity here.
You can get. Okay, so sorry, I went too fast. So if you were getting a new entity, the cost of going directly to the state, creating you a new business is about $300.
Depending on what state you in.
If you do it yourself, absolutely, depending on what state you're in. And then if someone else does it, it's 500 or more. All right, because you're paying them for their time and to do it for you. If you do a new LLC, you're probably going to receive between 25,000 to 35. The max that I've seen for a brand new LLC is about 45,000. You agree?
Agree.
You want to add anything? All right.
So when we say age corporation, you can buy, like I said earlier, a 1-year age corporation, a 2-year age corporation, a 5-year age corporation. All right. So if you buy a 1-year age corporation, that fee is like $2,500, depending on where you go. All right. But if you have a good credit profile, you can get anywhere between $50,000 and $80,000 with a 1-year-old corporation. You're not 2 years. You're not unlocking your full potential.
Right.
But you're unlocking enough potential to get going and get started.
Right. All right. Any questions so far, you guys? Make sure you type it in the chat so we can know. A 2-year age corporation, if you purchase a 2-year age corporation, then that 2-year age corporation is about $5,000 if someone else does it for you. And you can receive anywhere between, up to 200, but between 100 to 200 in funding for a 2-year age corporation.
Yeah. So I have only seen 2 people get less than 100,000 with the age corporation. One person got 68,000, but the only reason she got 68,000 is because she didn't do the process the correct way. It took a long time in her funding process. The other person got 90,000
because they decided to stop.
Because they wanted to stop. Mm-hmm. All right. So understand, most people get over $100,000 in business funding. All right. That's with a 2-year-old corporation.
All right. So credit boosters. We talked at the beginning that there are some ways that you can boost up your credit score without actually getting a credit inquiry. All right. So these accounts boost your score. They create age. They create accounts. They create primary accounts if you don't have them on your credit report, so that you can start building it up quickly to be able to go for funding. So those credit boosters are, one is Self-Lender. You want to tell them what Self-Lender is, Sonny?
Yes. Self-Lender is a company to where they will add a installment loan on your credit, and you pay every month on that loan. And once you get done paying on that loan, they give you the money back. So if you get a $700 loan, remember, you need accounts, and you need a mixture of accounts. Just because it's $700 doesn't mean it's not a good account. And once you get done paying on that loan, they give that money back to you. So if you need to add an account, let's say you got 3 or 4 accounts, but you need 4 or 5 accounts, you add a Self-Lender, boom, now you got enough accounts. All right. Kickstart is basically the same way. Experian Boost, rent reporters. If you didn't know, you can report your rent.
Yes.
You got to make sure you make your rent payments on time.
Because it's going to ask the landlord. Absolutely.
Because it's going to ask the landlord, but you can report your rent. And I love rent reporters because you can report up to 5 years.
Yes, they backdated for you.
Of backdated rent. And remember, from the data point standpoint,
your age of your credit report is important.
So if you have a credit report that's young, 1 to 2 years, let's go and add a rent reporters to your credit report. That way we can extend your age out and it's longer. All right. So understand, you're going to use them accordingly, but
based
you got
on your needs. You need to first understand What is it that my credit reports need? What is it that I'm lacking so that you can add what it is that you need?
Yeah. So anytime I talk to someone about credit, my question is, what are you missing? You got to understand what you're missing in order to understand how to improve it.
And it's not always paying down your debt. A lot of people feel like, oh, well, I owe too much. That's what I'm missing. What is your utilization to say you owe too much? Because if your utilization is under 20%, then you really don't owe too much. Maybe it's your history. Maybe it's you have too many ink. Like, what is it in general that you're missing?
Yes. You can do trade lines, meaning if you have a auntie or uncle that has a credit card with a high limit and a low balance and they've never been late, ask them to add you to that card and you will get all of their history. So trade lines are one of our go-tos because we can use a trade line to help you with utilization.
Right.
We can use a trade line to help you with age also. So if you have a young credit report and we add a trade line, that'll increase your age.
Mhm.
If you got utilization problems and we add a trade line, that can help your utilization.
Yes.
And the way that they score in the algorithm work is that it's not a per car, it's per card, but they look at your overall utilization.
Your
So
average.
if you got your overall utilization.
I thought you was going to say history.
So if you got two cards and one card is, you got two $10,000 limit cards. One card got $10,000 on it, the other card had zero on it. You have a 50% utilization from that $10,000. It's not like 100% and zero. They're going to add them together and then get your utilization. So if you have cards that are near maxed out and you add a trade line, that will offset your utilization. And once your utilization goes down, because that's a third of your credit report,
that
your
credit
score goes up.
Yep. Just like that. Absolutely. All right. So let's talk about it. Ready?
All right.
All right. So this person got.
Before you say this, if y'all know us and y'all listen to us, we don't talk from theory. All right.
Okay.
We talk from experience, from our personal experience and people that's connected to us. So the reason we talk so confident about this stuff is because we've done this stuff. All right. And we ain't telling you what could happen. We're telling you based on experience of what has happened.
Absolutely.
All right.
All right. So one of our mentees just recently got $155,000 in funding. They had a 2-year-old age corporation, and they literally just finished the funding process.
Yes, they just finished the funding process. So when she came to us, she didn't have a business. All right.
Mm-hmm.
Do you have a business? No, I do not have an LLC. All right. So instead of us starting her a new LLC, we bought her, we helped her get an A's corporation. So with the A's corporation, she got $155,000 compared to if she would have just started a new LLC and went for funding with her same credit profile, she would have got anywhere between 25, 35, 45,000 max. So understand, you buy an A's corporation, and she bought a 2-year A's corporation. All right. And that's kind of what we recommend. If you're going to invest the money into buying a corporation, invest it so that you can max out on what you're doing.
Absolutely. T said receipts. Absolutely.
Oh, yeah. We don't play about that.
Absolutely.
We got some receipts now.
All right. So this person got $120,500 in funding. And this is recent too. So like March 15th, they just finished a round of funding. $120,000. What can you do with $120,000 in funding? And their business is a little over a year, about a year and a half old.
No, Nikki was 2.
She was 2?
Yeah.
Okay.
So, and let me tell you how I know she was 2. So when she went for funding the first time, she got like $36,000 in funding, which was okay for where she was and what she had going on.
And what she needed.
That's what she needed to get her first deal going. That was cool. All right. But we came back a year later when her LLC reached 2 years old. We paid back all the funding that we had. In her second round, she got $120,500 in funding. All right. So understand that even if you just go get some funding, start the process. Start it. Like get some funding to go through it. Because you can always do your first project. Once it's finished, come back and get more funding.
It was so funny because Nikki was like, in the middle of her first project, she thought that 35,000 was going to be all she needed. And in the middle of her project, she was like, I don't know why I stopped. I really needed more, because at that point, her house was sitting on the market. So she was paying those interest payments. So that immediately, once that house sold, she was like, I need more funding. How do I restructure my credit report so that I can go back for funding? It took her about 30 days of restructuring, following the plan that we created, about 30 days of structuring before she went through funding to get 120,000. Had she not restructured, she probably wouldn't have gotten any money.
She definitely wouldn't have got that.
She wouldn't have got any money though from a restructure part.
I don't think so neither.
Yeah. All right.
Well,
someone said mine. I got you, Terrell. Nope, don't apply. What we're going to create the plan for you, and we're going to walk you through exactly which ones to apply for. We were actually mapping out your plan yesterday. Yep.
So just hold tight.
And it gets really like exciting during this time. Like, what do I do? What do I do? You follow directions and sit tight, because one move can have you going from 150,000 to 60,000
to 10,000
to zero.
For real. And again, we ain't telling you from theory.
We've seen it. I had one person, they got real excited. They were ready to go. And then they started doing things on their own and started getting denials. Well, guess what? Those denials were at some of our biggest banks that we have relationships with. And it just went out the door. And it was like, what did you do? Well, I just got excited. I understand, but now we're screwed. I think she got 10,000
and had a great profile. I mean, almost 800 profile.
Yes.
And she only got $10,000 because she got excited, and tried to do it by herself.
So don't do it by yourself, y'all. All right, so we got Nikki. Next is 132 funding. The last one was a $15,000 line of credit. So they come, like, you can get them in lines of credit, credit cards, and just maneuver from there. The credit cards, you can do, the lines of credit, you can pull those off just like it's cash for most of them, and then just have them in your account. So now you're able to show money in your account if you're doing deals. There's so many ways, you guys.
Yes. He had a 2-year age corporation also.
Mm-hmm.
Go ahead next.
Yep, I thought you was going to say more.
Oh.
Okay. And then this person, they literally was like, listen, this is enough. We're good right here. And they probably could have got about 250.
Yeah.
But they slowed down the process because they got scared a little. All right.
Yeah.
2-year age corporation.
Yep.
So that investment of $5,000 brought them back $178,000. What's the return on that?
I can't do the type of numbers.
You can do it.
I'm not. A lot of money.
A lot
of possibilities.
A lot.
And this was beginning of the year.
Mm-hmm.
Jimmy has two investments under his belt so far this year, and a third one under contract.
Mm-hmm.
Just from doing business funding.
No, I got a fourth one because he's doing transactional funding.
Got a fourth one. He told me they're gonna do 4 deals. So in a 5-month window, Jimmy's going to go from doing no deals in 40 years to 4 deals in 5 months because of business funding. Like a lot of times we are praying for stuff and we're asking for stuff, and things are presented to us, but we're scared to take those steps. Like we're scared to take those moves. We're scared to make those investments. Like you can't keep asking for something to change and you not changing with it. If he had not took this step, he would still have not done a deal.
Right. I feel like that's it. Yep.
All right, that's it.
Yep.
If you want business funding, if it's something that interests you, give us a call. I'll put a 15-minute link in here. Or you go to the website, Dendo's Funding. Business funding is something that we do. Trade lines is something that we do. Age corporations is something that we do. So if you need any of those things, come talk to us. All right. And we don't got to have no conversation of trying to sell you nothing. We could just answer your questions and give you the information. And it's up to you to make a decision.
Absolutely.
All right. But I will advise you, if you've been looking for change and you got a 700 credit score, this might be the thing that you're looking for. All right.
I just dropped the link in the chat, you guys, so we can hop on the call. Let's see where you are. Let's see what your credit profile looks like. And let's see if it's business funding. Let's see if it's personal funding. Someone said, what are some of the auto-approved banks and cards? It really depends on your profile.
Yeah, there is no auto-approval. And I'm not going to say there is no auto-approval. The way we do our business funding is all based on, it's customized. It's not like it's a one size fit all.
Right.
It's a customized plan for each individual.
Because some people may not look good when it comes to a bank that's pulling from Equifax, but they may look better at a bank that's pulling from TransUnion. One bank may pull from Equifax in the southeastern region, but in the northwest, they may pull from a whole nother one. So it's a science to it based on where you are, based on what banks and lenders you're going towards, and what your credit profile looks like. No one's credit profile has ever looked the same. They may be similar, but no one looks the same. So based on that is where you want to go. It's not like you're getting a home loan where if you have above a 680 credit score, you're going to get an automatic generated approval. No, you can literally have a 750 credit score and still get a denial.
I can't read it on my
I got you. T said this information was so impactful. Thank you for sharing. You're so welcome, T. You're so welcome.
Thank you, T.
Chris said, can you do entire deals with just business funding? Absolutely. But let's just say you get,
hold on before you go too far.
Okay.
Yes, you can do entire deals, but also it depends on what is the entire deal. Because some deals, it might be 30,000, some deals might be 100,000. So to say the entire deal is kind of a stretch without knowing the deal. All right. But
yes, you can, absolutely. But how much more could you do too if you didn't use all business funding? For example, let's just use simple numbers and say that the deal was $100,000 and you got $125,000 in business funding. Yes, you can do that $100,000 off of your $125,000 business funding, but that's just one deal. And say you're going to get $25,000 in returns. You did that one deal with your business funding. But what if you would have broken up that $100,000 into 4 different deals? So now you got 4 times that you could make $25,000 versus one time, which is using it one time. So absolutely you can, but it's all about what's that deal? How long is it going to take for you to do it? The speed of money is more important. So if you can do it quickly, if that 100,000 is going to take you 15 to 30 days, then why not use it all on one deal? Because it's only going to take you a short amount of time. But if it's going to take you 6 months to a year, I would recommend you not put it all on your business
100%,
funding.
100% agree.
Those are some good questions.
Great questions. All right. Well, we've been here longer than I thought we would, honestly.
Absolutely.
Again, if you need some advice, talk to us, and we can help y'all get some business funding and start doing some deals. And you don't just have to do real estate with this money. Like most of our audience is a real estate based audience, but if you got other businesses, you got a daycare, you got car washes, if you got other businesses, you can use the funds for that also. It's not just real estate funding.
Absolutely. All right. Any other questions? Miss Deer says she hates she missed it.
We'll leave a replay in the group. We're gonna leave this replay in the group this year. So go back and watch the replay.
Once we get off, go back and
once
watch
we get it off. Now don't say I didn't tell you. We are cleaning it up. So if it ain't there in 24 to 48 hours, don't ask me where it went.
Yes. All right. She said, "Will do."
All right. Let's go. Well, thank y'all for listening, being in a very attentive audience. What we got podcast coming up?
We have a podcast this Thursday. We'll be going live with Wyatt Reed. I'm excited. Wyatt is one of our good friends. So he'll be on our podcast this Thursday. So at 1 p.m. And we have a live training. That's what Antonio was talking about, because this is like my 50th time, not 50th time of not putting it up. So let me find it real quick. Boom. Register for our virtual live training. It's going to be April 25th at 7 p.m. It's on Zoom. Make sure you're there. You have to register to attend. This one will not be broadcast in the group. It is strictly on Zoom. And the only way you can get it is if you register. Go to the Denmark side, click on Masterclass. Go ahead and register now. Don't wait to the last minute to where it's booked and you have no spots available. All right. Anything else I'm missing?
No, I just got a little deflated. Oh no.
Deflate you back. All right, you guys. Have a wonderful, wonderful, wonderful day. Love you guys. Peace.